Welcome. Let's move straight into the topic of China today. There has been recent regulatory crackdown in China, and that is also starting to hurt the economy. We have seen a recent reading of the PMI numbers also showing a bit of this, at least on the non-manufacturing side. There has been reforms from Xi Jinping's government targeting the private education companies, as well as the steel production, property, consumer data, and internet companies. So today, I'm very pleased to be joined by Dmitry Vlasov, Senior Portfolio Advisor China at East Capital. You're based in Hong Kong, and I actually hand over to you directly. Welcome, Dmitry.
Thank you, Magnus. Very happy to be here. As you correctly pointed out, there have been a lot of negative news recently related to Chinese equities, but I think the biggest piece of news relates to the regulatory actions recently initiated by Chinese government against the internet companies. If you look at the timetable of this, I think it all started last year when Ant Group, the subsidiary of Alibaba, didn't finalize its IPO, and since then there have been a lot of actions that Chinese regulators took against the internet sector. The most significant are the new policies related to the education sector. That happened sometime in the spring, and actually it resulted in almost near collapse of education stocks. These stocks have been very popular with the investors, especially with the foreign investors. They're listed in the US, and the companies lost nearly 90%, even more than 90% of their values. And this is something that is likely to be permanent loss of capital. So, but that's not where it stopped. Since then, there have been a number of other actions. Another one, which probably I should point out, is the IPO of the DD. Global DD is the largest ride-hauling application in China, and they have been growing very nicely. And they had an IPO in the US, but right after the IPO in the US, the regulator came out with a number of measures against the company, and it also results in significant decline of the stock price. Since then, we had a number of other actions. We had criticism of online gaming, live streaming, e-commerce, you name it. It's been a lot, and as a result, the equities, the valuation of the equities of China internet companies took a big hit and lost a lot of values since the regulatory campaign started a few months ago. If you look at this slide, you see the impact, the quantitative impact of these measures. Actually, MSCI China, which is the light blue line there, it's down almost 15%. This is in the environment where you have S&P 500 and MSCI World Index is actually having a great year, up almost 20%. And because China is so big in the emerging market index, also emerging markets are underperforming the developed markets, just barely up year to date. What's interesting to see, though, because MSCI China is heavily weighted with the internet companies. I think internet, mega tech companies like Tencent, Alibaba, it's more than 40% of the index, and that's why the impact is so big. But if you look at the other China index, at the index of the A shares, the domestic shares, that index has been doing much better. It's slightly up, still underperforming developed markets, but clearly the performance of the domestic A shares is much better compared to the overseas listed shares. And I think there is a simple explanation. You have much less regulatory pressure there. You have more diversification within the sectors. And also what's really important for the A shares, you actually have different investor base, because most of the investors in the domestic market, they're local investors. So they're less influenced by the global by the factors that impact the global capital. So and they're less sensitive to some of the geopolitical risks. So you have a much better performance of the domestic equities. And unfortunately, the A shares, they are not very big in the emerging market index, because MSCI index provider, they just started adding, A shares a few years ago, and so far they only added 20% of the eligible shares. So it's only 5% of the total MSCI emerging market index that is, where you have A shares. But the majority of the Chinese equities, they're so-called A shares or the US ADRs.
We have seen some dip buying in the markets over the last week. What's your view there? Is this the time to buy the dip, or is it? Can we expect another leg down, or will this be a continuation of more negative news coming out from China?
It's really hard to say. Is it a good time to buy? Because the key factor that impacts the performance of these stocks, at least in the short term, it's very unpredictable. Those are the government actions. And recently they have been, impacting the sentiment, but not only the sentiment, because they also impact the outlook for the internet companies, because you have less growth opportunities due to introduction of some of the very strict measures, new personal data protection law, and so on and so forth. So I think in the long term, China internet sector is clearly going to be a very viable investment venue. But in the short term, it's very unpredictable. So it all depends on your investment horizon and how much risk you want to take. Because the very bearish case, can be that you have a permanently higher risk premium for the Chinese internet companies. That's not the case that we believe in, but that's the kind of spectrum of the outcome. At the same time, because you also, when you invest in China, you have a number of opportunities. You can invest in the domestic shares that have a lot of interesting opportunities, in the sectors that are very popular right now and structural growers, like NEV, renewable energy, artificial intelligence. So, yeah, it all depends on where you want to be and how much risk you want to take.
I understand. The latest mentioning of the common prosperity. Can you elaborate a little bit on that, and how that could affect companies in China as well?
Well, I think that's been, I think it's a recent kind of term coined by the media and by Xi Jinping. I think, and it's been interpreted different by different participants. But what we believe, it's essentially just increasing the quality of life for much bigger part of the population. Because so far, even though China has been growing at such a high rate for so many years, you still have big pockets of the population that didn't fully participate in this prosperous growth. And I think that's the next stage for the Chinese government. So a lot of that, actually, it doesn't necessarily mean to take the money from people who are rich and wealthy and, redistributing the money to the poor. No, it would, emphasize the development of, let's say, less developed areas, rural areas, bigger participation of these groups in the economic growth and prosperity in the end.
All right. So let's move on to a little bit forward looking on the GDP side. I mean, we know we have the port closures have affected production, etc. You have all the supply chain issues ongoing. But how do you foresee the future for China? I mean, being the second largest market in the world.
Indeed, there have been a lot of issues the Chinese economy, has to deal with since the pandemic started. But I would say that they're doing, very well, relatively well. So last year it was a good growth in the market, in the economy, despite very challenging environment. I think this year, the economic momentum, especially in the first half, has been very strong. We definitely saw a bit of weakening in July, and as you said, Magnus, PMI for the month of August also was a bit light. But in general, the economy is doing okay. So what's more important, I think, is that long-term outlook is very favorable because they are targeting doubling of the GDP over the next 15 years, and I think they already said this in 2010, but at that time it was the timetable was only 10 years, and they delivered that. So they have credibility when they put these long-term goals, and that would imply almost 4.7%. From this level, it's actually a very, very healthy level of growth. It's not going to be linear. It's going to be fluctuating. But this year, I think we are still going to deliver very strong. We are going to see very strong GDP growth rate of above 8%. And for the next year, there would be a bit of normalization, but it would be above developed and emerging markets level. So yes, I think it still looks very, very interesting for China.
Oh, that sounds great, Dimitri. I have a last question actually, and I wanted to touch upon the local governments, and they seem to be having some problems to sell special bonds, and that will also potentially have a negative impact on infrastructure investment. What do you see there? And is the property sector a sector to be watching very closely and carefully from a risk perspective?
Of course, properties. Chinese properties have been something on the top of the risk agenda for the international investors, but the sector has been doing relatively well, and I think Chinese regulators, they now became very skillful in regulating and sometimes over-regulating this sector. So obviously, local governments, they depend on the land sale, to finance some of their projects and budgets. So and now when the government is trying to cool down financing channel for the developers, obviously local governments are also going to be impacted. I think you clearly see too much regulation in Chinese property markets, and again it goes back to the agenda. The agenda there is that property is not for the investments and speculation. Properties are for living, and that's the major point here. So also in the past, the properties they've been a bit of the speculative nature because China didn't have many years ago a very well developed equity markets. I think now the governments, they want to redistribute or to allocate the savings of the Chinese people from the property investments into the equity markets, because they're really focusing on developing well functioning capital markets, and and that's how it will fit into that.
Okay, thanks a lot, Dimitri. Time will tell. Thanks a lot for joining us today, and thank you for listening in.
My pleasure. Thank you, Magnus.